Yes, people, welcome back to FutureFunded. Today I'm going to be going through something slightly different. I'm going to be showing you why so many retail traders get caught and manipulated in the market and how to essentially go against them, how to have an entry strategy that goes in line with higher time frame structure so that you don't get caught on the lower time frame noise.
Right guys, so if we have a look at this case scenario as the first thing that we want to focus on, all right? Now, what most people would do in this situation is they would just very simply look for an Asia high and Asia low, which is right here. And most traders, if they understand the concept of SMC, would simply just look for either a long at Asia low or a buy at Asia high. Okay, so for example, we've got Asia lows right here. However, if you look at the overall market structure on the higher time frame, you can see that price is telling us a completely different picture. Okay, you've got a lower high followed by a new low on the 1 hour. We've got breaker structure followed by a higher low, and you see here we've got a potential higher low right here, which is aiming to make a new high as we speak, but currently speaking it's failed to do so. So at the moment this is nothing more than liquidity and considered to be a failed low. So if we keep that in mind, as price is coming up into this area, it's creating internally anyway in the working range high, higher low, higher high. All right, but one of the main things that catches the eye is we've got two areas of liquidity. We've got one right here and one down here. So for price to actually reverse from Asia lows itself, considering how much liquidity there is down there, is quite unlikely. You can see here price gets to Asia low, it doesn't actually take it out, it just creates more liquidity. Look, you got equal lows right there. Now what's going to happen in this situation, price pushes up, it then dumps, and what you will see is all retail traders now starting to get into the market. They're looking at taking long positions at Asia low to go up to Asia high because they see that the market structure is bullish overall, and they're looking at a very simple Asia sweep. Okay, it's a very simple methodology to do, but think about it logically, guys. The more simple it is, the more likely you're going to get manipulated, the more likely you're going to get stop hunting and this, that, and the other. Focus on higher time frame, focus on liquidity. That's what moves price in the first place. We can see we have liquidity down here, we have another point right here. All we essentially need to wait for is price to at least get to one of those points and take it out, completely sweep it. Price does that here. Do you see how we got a huge rejection candle on the 5-minute time frame? Okay, now if I fast forward this slightly, you can see that price now starts to slow down. All right, now the question is, are we going to get another push to the downside like we got on this one up here? Are we going to get the same indication? That's going to be the telling point whether we're going to decide to go long here or whether we're going to wait for price to actually take out this Asia, this area of liquidity. However, if we actually have a look, price attempts to do it and then starts moving up. Okay, so now we have a failed attempt to move price to the downside. So what does that make this? That makes this a failed high right here. But most importantly, it's showing us now that buyers are now starting to really step into the market and take some level of control. As we start to see retracements coming in, we know that the 5-minute breaker structure high is still up here. We know that liquidity has been taken here and here, and it goes in line with higher time frame structure of being overall bullish until we get up to that next breaker structure high on the 4 hour and the daily. So if we keep that in mind, and now we can go into the 1-minute time frame, and now we can start looking for potential entries. We've got this high that's just been taken out. We've got a point of interest, which is right here. But do you see how price has come in immediately, swept, and then tapped into this point of interest? Okay. Here is another way that retail traders can get taken out of the market so easily. Most retail traders will look at something like this. They'll look at one bullish candle and start buying and maybe aim for the highs. Okay, but where is the manipulation at that point? You can't see any real indication that institutions have actually come into the market. Okay, so if you're in a situation like that, you are more than likely going to get manipulated. All right, I keep saying it and I'll keep saying it even more. So we don't have any real confluences to enter yet. If price was to go off from this one candle, we stay out the trade, no problem, we find another one. Okay, it's not enough indications. So if we keep going, we can see sellers are now come back into the market, and now you have an institution who's done a big liquidity sweep of this previous low. So now all of the retail traders who are buying here have now just been stopped out of the market. Okay, this low has now been swept, and you see, as soon as that happens, what's the next candle that we get? We get a bullish candle showing us an indication that price has indeed now started to take control. We've seen the manipulation, we've seen an institution come into the market, take out retail stops, and start the reversal process. Now, don't get me wrong, there is still an area of liquidity right here, so you have to factor that in. Okay, however, if I was to go like this, and this is exactly what I did, I had my stop at 1.8 pip stops, which was just below this area of liquidity, because I was anticipating that price could even come back again and just sweep this equal lows down here before taking off, which would have been absolutely fine. There's a fair value gap just underneath that anyway, and then targets are at the 5-minute high. Okay, now we've got higher time frame confluences to take this trade. Now we've got lower time frame confluences that price has not only slowed down, but sellers have failed to move the price even lower, just like they did previously. They actually managed to move price lower, and everyone who was trading from Asia lows got stopped out. Now it's a different scenario. Buyers are stepping in and stepping in and stepping in. And we've got a 2-test liquidity sweep at a point of interest after we got a liquidity sweep of this failed high. So now, very simply, we can just target the 5-minute high. We know we shouldn't be staying in this for a long period of time. Why? Because as soon as we get into that 5-minute, let's just say we get there. Oh, it's happened anyway, but let me just fast forward the trade so we can get there first. So you see, obviously, beautiful first candle. We then, momentum's crazy, to be completely honest with you, in literally about 2.5 minutes. We've hit full TP. All right, but we don't necessarily want to be going any further than this. Why? Because this is a 5-minute break of structure high. At breaks of structures, it's more like liquidity. Okay, I know a lot of people get confused in thinking that it's more than likely gonna do something like this, which sometimes it can, but majority of the times it more likely does a larger retracement before going back up, or sometimes it's just a liquidity sweep and then it starts pumping back down again. Okay, why? Because all the retail sellers who are sat up here looking to take short positions, they have their stops just above. They've now just been cleaned out of the market, so now it's a good time for us to exit our position as well. All right, and it was a beautiful 1 to 3. It absolutely rallied in literally, like I said, 2.5 minutes. Why? Because the high time frame structure aligned with lower time frame. The narrative was in my favor, and on top of that, the risk management and the trade management and understanding the meaning of my entries and exits and where I'm looking to exit and so forth was perfect. All right, obviously everything can always have improvements and so forth. I'm not saying that I've got a crystal ball, I absolutely haven't, but on this particular occasion everything played out nicely, and it played out because I understood the meaning and I understood what I was looking for, and I wasn't focusing it based upon price action. I was focusing based upon buyers and sellers and the meaning of what's actually going on. So I hope that helps, guys, and I look forward to seeing you on the next video.
So there you have it, guys. I know obviously in the markets so much manipulation takes place. There's a lot of noise, there's a lot of stop hunting, there's a lot of institutional manipulation, but if you understand how to create a narrative and how to displace yourself against most retail traders, and you understand the meaning, that's when your trading can really take off, so long as you have the consistency. So as always, make sure to like and follow, make sure to subscribe, and I'll see you on the next video.